Hey everyone, welcome back. In today's video, we're going to be talking about GameStop's recent announcement that they are going to be issuing warrants as a dividend and why that could be a win-win for everybody. You guys come here because you want a non-emotional, non-hype, common sense take about what I think about these warrants and a lot of other things. So that's what we're going to talk about in today's video. So let's set the stage. Here is what we're going to discuss. The basics of warrants, the pros and cons, why GameStop is going to issue warrants as a dividend, how does it impact the bondholders, many of whom are short on GameStop, and we're going to finish up by looking at a couple of other companies who in the past couple years employed the warrant as a dividend strategy. I think if you make it through this entire video, you are going to learn something, and I want to hear your questions at the end. So let's get right into the material. First things first, what is a dividend? You could think of it as kind of a thank you gift from the company to shareholders, but in reality, it is a way for the companies to distribute profits directly with you. And most often we think of cash dividends, cash that is directly deposited from the company into your brokerage account. Traditional cash dividends are common with stable companies like big banks or utilities. GameStop has said that they don't plan on issuing any cash dividends. So we think then about the other potential ways that they might issue a dividend. Not all dividends are cash. Some companies distribute dividends in the form of stock, and other companies distribute dividends like we have here with GameStop in the form of warrants. So what exactly are warrants? You could think of them as a long-term call option that the company GameStop is giving you that gives you the option to buy the stock at a fixed price within a certain time range. That fixed price we call the exercise price, $32 for these warrants, and the time frame is 1 year through the end of October 2026. Imagine, if you will, the warrants as kind of like a free coupon that GameStop is giving you that says buy one share of GameStop at $32, expires October 2026. If at any point before that end of October 2026, GameStop were to run up to, let's say, $50 as an example, you can turn in that coupon, exercise your warrant, and you have the right to buy a share of GameStop at $32. The stock is trading at $50. That means you have an immediate $18 gain, which you could just keep in your account if you want to hold the stock, or you could immediately sell that share for the $50, the going market price, and pocket the difference. The choice is up to you. Warrants are issued by the company itself. So when you buy the share for $32, your money goes directly to GameStop instead of some other trader in the market. And that is a win for GameStop. And if the price is well above $32 and you're able to book some profits, that is a win for you as well. Some of you guys have asked me, do I know what the warrants are going to be priced at, and how are warrants priced? The warrant will be priced at the time of issuance, which we have on the screen here, October 7th, 2025. And stock warrants are typically priced at their fair market value using models similar to the Black-Scholes option pricing formula. And many things are factored into determining a warrant price: the underlying stock price, the strike price of the warrant, time remaining to expiration, volatility, the risk-free interest rate, and dividends, if any, to determine both the intrinsic and time value of the warrant. As you can see here on the screen, the pricing models are complicated. Don't get too worried about the details. Just know that there are a lot of variables to ensure that the warrant price reflects the potential upside while also accounting for risks. The actual price for GameStop's warrants when they begin trading after distribution is hard to say. It's going to depend on the share price and volatility mainly, but I think we could use a rough estimate of between $3 and $5 per warrant. And if I had to use today's data, Friday's data, I would say around $3. That price could change as the price of the ticker changes between now and October 7th and as volatility changes. Why do companies like GameStop issue warrants as a dividend? We know that Investors were clamoring for some sort of dividend, and this is a way for the company to give you something, while at the same time, as I show on the screen here, GameStop is telling you the purpose to allow you to participate in the company's capital raising on a non-dilutive basis. And apologies in advance to the social media pumpers, but I just want to also point out what it does not say here. GameStop is not telling you that this is designed to cause a short squeeze, nor is it designed to expose multiple floats sold and not reported as naked shorts. This is a way for the company to have a win-win. If the price runs up, maybe through some announcement that they're going to make, then you win by being able to capture some profits, and the company wins by being able to raise even more capital. Not only does GameStop get the potential to raise capital, they get to check the box that, hey, we gave you something, we gave you a dividend, and it was even non-dilutive if the price runs up and you choose to exercise your warrant. So a lot of boxes here checked by GameStop, and the ball is really in their court now to deliver some news to push that price up and deliver a win both to the company and to shareholders. So let's cross our fingers and see what happens. Let's talk really quickly pros and cons of these warrants, a couple bullet points of each. Looking at the pros, the good things about the warrants, it is free potential profit to you if the stock moons. Number two, you can trade the warrants at any time. They're always going to have some value up until the point that they expire, whether or not the stock is above $32 or not. Obviously, the higher the stock price is above 32, the more intrinsic value the warrants have and the more value that they will have out there in the market. They will be trading on the NYSE under their own stock ticker symbol, GMEWS. WS is a typical suffix added to a company's ticker symbol when warrants are issued. It is cute, but it was not by design to give you any hidden message. I see some people already running with the tinfoil on that. No, W or WS are very common suffixes added to the ticker. It just works out to be a funny little word there related to a cat. Number three, pro. It doesn't cost the company any cash up front to issue warrants versus if they were doing a cash dividend. So it is great for a company like GameStop that is trying to conserve cash for other uses like an acquisition. What are the cons or the risks to be aware of with these warrants? Number one, they could expire worthless. So that is a risk you need to be aware of if the price never goes over 32 before October 2026. Number two, if you choose to exercise them, it's going to require some cash out of your pocket, $32 per warrant to purchase stock. And the last con is that the warrants are dilutive. I know that GameStop is calling them non-dilutive. That really depends on how you choose to trade these warrants. If you exercise them and hold the shares, it is indeed non-dilutive because you will maintain your percentage ownership in the company. For people who sell their warrants or exercise and then sell the shares or don't have the money to exercise while everybody else is exercising and increasing the float by 59 million shares, in those scenarios, it could be dilutive to you. So make sure you understand it is non-dilutive if you exercise and hold the shares. That doesn't mean that you have to exercise and hold the shares. It's just a definition to understand. And I see a lot of people getting confused by it. If you have any questions about the dilutive effect of these warrants, drop me a comment down below or send me a DM on X, and I will do my best to help explain it in the most basic way possible. In particular, just a couple of highlight things that you need to know about the GameStop warrants. You will get one warrant for every 10 shares that you own, rounded down. So if you have 500 shares, that is 50 warrants. The record date is October 3rd, and the warrants will be distributed on or about October 7th. I should note, and you probably already know if you're on social media, that some brokers have indicated that they may not support warrants and they may issue a payment in lieu of the warrants. This is upsetting to some people, but it is legal, and it's a broker-specific decision regarding how they handle all warrants. It is not something punishing you or targeting GameStop, nor should it be indicative of any broker's ownership or non-ownership of GameStop shares. It's just a policy decision that they make for all warrants. If you don't like that decision, find a better broker. This problem is most rampant in very tiny brokers, people like the Cash App, as an example, and some non-US brokers. If you don't like it, get a better broker. This has been a problem for many of you and many tickers and many different corporate actions. Time to get this fixed before the date of record, October 3rd. Additionally, if your shares are held in a margin account and if your broker has lent them out, you might not get the warrants. You might get a payment in lieu of the warrants. And if you have any questions about if your shares are in a margin account or if they are loaned out, call your broker now. Get this information straight before the record date, because it will be too late after October 3rd. So why did GameStop go the warrant route? I'm not going to fill your heads with stories of exposing shorts. I'll leave that to the pumper channels. I'm going to focus on what the company told you, the ability for you to participate in non-dilutive capital raising should the stock price go up. Ryan Cohen and GameStop stand to add $1.9 billion to the company's balance sheet if news or some catalyst takes the price up over $32. That is a win for GameStop. If you handle your warrants properly, intelligently, it is a chance for you to also have a win should the price go up over $32. It really is that simple. There are no guarantees, so it is wise to be thinking now, I think, about what your strategy is. And I've had some people ask me, Tony, do you think $32 acts as a ceiling or does it act as a floor? It's really hard for me to say this early, and especially with a company that is volatile like GameStop. And what is going to be the catalyst that drives it over $32? That I think is more important to think about than worrying right now, is $32 going to be a ceiling or a floor? I could make a compelling argument for either case. What I want to know is, Ryan, do you have any news cooking there in the back room that could send this stock to the moon? That's what we need to know. Before we wrap this video up, let's talk about the impact to shorts on GameStop of these warrants being issued. According to the most recent report that I have up here on the screen, 66 million shares short interest just over 16%. And I want you to notice here in the table that when GameStop started issuing the convertible bonds, the short interest went up from 28 million to 66 million. Let's call it up 40 million shares. And we have what, roughly 140 million shares of convertible bonds potentially that could be exercised at some point. Some people think that all of those shares need to be hedged by selling short. That's not the way it works. A percentage of the convertible bond shares will be hedged by selling short. We've got 40 million here or so as an increase to the shares sold short since the first convertible bond. I think that's a reasonable increase, and it is reasonable to expect that the vast majority of the shorts in GameStop are convertible note holders. Now, what I want you to notice is that GameStop is also distributing these warrants to the convertible bond holders. So if they are short as part of their delta hedging strategy, they will get warrants. They're not going to have to go out and scramble or wonder where they're going to get warrants from or buy them in the open market. I'm not expecting any crazy short-related buying of warrants because the bulk of the folks that are short GameStop are going to be given warrants from GameStop. It tells you that in the warrant FAQ. And if you're asking yourself why are they giving warrants to the shorts? Because the warrant agreements that GameStop signed with the bondholders have anti-dilution provisions in them. And GameStop has two choices. They can decrease the conversion price, adjust it, or as it says in the bottom here, highlighted in yellow, they could issue warrants as if the bondholders owned the shares. And that's what GameStop decided to do. As it says here in the middle of our screen, holders will receive warrants on an as converted basis, as if they converted. So I'm not buying this whole narrative being pushed out by certain people that the shorts are scared here. The vast majority of shorts are going to be receiving warrants because the vast majority of shorts are convertible bond holders. Yes, there are some shorts that are just sitting out there betting against the company and they don't own bonds. They're going to have to do something. And that could provide some interesting little jockeying around. I can't predict. I don't want you to think that I'm predicting nothing will happen. I don't know what's going to happen. I'm just saying, you know, temper your expectations. Remember all that pumping they did around the split dividend a couple years ago, and I told you guys, not really going to work out that way, and everybody got mad at me, but it didn't work out that way. I'm just going to say, temper your expectations. Don't get emotional. Don't overbet on this, and let's see what happens. Maybe we'll get lucky, but I'm not expecting any craziness here. What would get me excited, what would make me expect craziness, is if GameStop announces some news, bang, 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 right when these warrants are coming out. That extra catalyst could make things very interesting. You know what? It doesn't even have to be announced news when the warrants come out. Announce it anytime in the next year. And that is what I'm going to cross my fingers on. That, if they have some plan, some news that they plan to announce before October of 2026, boy, that could be just the catalyst needed to get GameStop to push over $32 and remain up there long enough for you to capture some profits. And I hope it goes that way. I'm certainly not saying that it can't go that way. It absolutely can go that way. And in our next video, I'm going to show you a couple of examples of other companies in the last several years who have done warrants as a dividend and what happened on their stock charts. I wanted to do it in this video, but this one's getting a little bit long and I like to respect your time. So we will cover that in the next video. Meanwhile, if you have any questions or comments about what I covered in tonight's video, please leave me a comment down below. I love to hear from you guys. And I don't think that most of you are bullish enough on GameStop. I'm Tony Denaro. I will see you on the next video.